The reason I'm buying Bitcoin is because I think when we get through the all-time highs again and basically get rid of this 4-year cycle belief, now there's no imaginary place for people to ever again care about. And that's normally what happens in equity markets. And oh, by the way, 2017 was the end of the Donald Trump tax cuts. Well, we've had tariffs this year. We've had bad stuff happen this year. The equity market in 18 was bad. At one point, it was down 20% year to date in December. In 2022, the equity market was down. So the one thing about the Bitcoin halving cycle, it seems to have been trading with traditional finance markets. So when you say that Bitcoin's 4-year cycle is going to play out next year, you're also embeddedly saying you don't believe in AI and you don't believe profit margins are coming and you don't believe the earnings are going to be higher and the S&P is going to go higher.
And you don't believe that the Fed's going to cut interest rates.
Yeah, exactly. The Fed's going to cut rates.
In every market cycle, there comes a moment when the old models no longer explain what's happening, and the 4-year Bitcoin cycle may be one of them. Jordi Visser, president and CIO of Weiss Multi-Strategy Advisors, believes that the moment is now. For years, investors have treated Bitcoin like clockwork: boom, bust, repeat. But Visser argues that this predictable rhythm is breaking down as macroeconomic forces, AI-driven productivity, and policy shifts reshape how capital moves across global markets. Visser's central thesis is simple but profound. The next Bitcoin rally won't be driven by halving cycles. It'll be driven by the same forces propelling the stock market higher. He points to historical parallels between Bitcoin and traditional finance, showing how both have traded in tandem during key moments of market stress. When equities fell in 2018 and 2022, Bitcoin did too. But now, with inflation cooling, corporate earnings improving, and the Federal Reserve preparing to cut interest rates, the setup is far different. The Fed's pivot toward easing marks the beginning of a liquidity wave that could lift all risk assets, and this time, Bitcoin may lead rather than lag. As Visser explains, believing in the old 4-year halving model today means ignoring everything that's changing in the real economy. AI adoption is accelerating, profit margins are expanding, and the S&P 500 continues to defy bearish expectations. The macro environment is no longer one of contraction and fear. It's one of transformation and innovation. And for Bitcoin, that shift could mean the end of its cyclical volatility and the start of a long, sustained climb into uncharted territory. In this video, we'll dive deeper into Jordi Visser's latest analysis, how he connects the dots between AI, macro cycles, and digital assets, and why he believes Bitcoin is on the verge of decoupling from its past. Make sure to hit the like button, subscribe, and turn on notifications, because what Visser reveals next could redefine how investors look at Bitcoin, gold, and the US economy over the next 12 months.
I remember when Twitter first entered my world of like, wow, in the markets, you got to pay attention to this thing. Like you're getting news that isn't coming across my Bloomberg at the same time. Even if it's rumors, you're catching stuff. So here we are now. You fast forward, it's probably a decade later. And back then, and there's still some hedge funds that can't use Twitter, or at least banks and things like that. The panic just grows quickly, but it's this thing that has shocked me that you and I have gone through this year, which is if we laid back and said all of the panics that have occurred, and I said last week that, hey, you kind of at nighttime, I'm warning my son, like there's deer out there when it's dark. And
I mean, you nailed it. You were like 3 hours early.
So all that took was a tweet. AI bubble. People are, I mean, they're all over this AI bubble. And just so people hear this, there are always bubbles in the market. Just like Jim Cramer likes to go on TV, there's a bull market somewhere. If a market is going up, there's a bubble somewhere. So define a bubble as zero revenue companies are trading at high valuations. So whether it's Oklo, whether it's Fermi, whether it's a lot of these energy names which don't have revenues right now, you can categorize those as bubbles. They're not the entire market. What dominates what happens in the market is nominal GDP, inflation, so you get back to real, and you get to a scenario where earnings follow nominal GDP. So everything is fine. But to get back to your point about Bitcoin, whenever this kind of situation happens that everyone's panicking, and it's something that should be expected, China and the US have to come to a deal. I'm going to say this again and again. Rare earth is the most critical factor in the world. It has been all year. We've watched tariffs be a fear. We've watched stagflation be a fear. We've watched inflation be a fear. I can't even remember everything that we've had to talk about here as fears. But now we have bubbles and we have credit risk, and the world's going to end. for Bitcoin to actually have a sustainable move higher, I learned a very valuable lesson this year. The boogeyman of the 4-year cycle, which you can tell me about, because I'm not smart enough to understand this whole, this is going to be a crash that happens. And I go back and look and I see, well, in 2017, right around this time period, it was the peak. 2021, oh, I get it. So that's 2 data points. I don't really live off 2 data points. And maybe there's one in 13. I didn't go back to look. It was still too new. But in my trying to understand, so when I have a view and it doesn't happen, and I thought we'd be much higher in Bitcoin right now, given all of the things that I expected in terms of the expansion of kind of the network effects this year, we've seen stablecoin market cap go higher and Bitcoin's not going higher. Bitcoin's like the same price it was in December, to give you an idea of how little it's gone. We've got gold going higher. So we've had this year, we've got money supply growing. You've got everything that you would expect happening, including the stock market going higher. And Bitcoin has just not had the normal beta that it's had. But the TradFi world always has this thing that it comes into beliefs, whether it's before presidential cycle. You'll see all these seasonals come out and people believe them. And seasonals work until they don't work. And if too many people are worried about the seasonals, what normally happens is they sell in front of it. And in September and early October, it was very clear to me and the people I was talking to in the space that there were a lot of whales / OGs, people that have made a lot of money that were selling. And it would kind of make sense in the 4-year cycle. But you said something very important. I just want to make sure people hear this. So my job in coming over from the traditional finance world as a macro person is to think about what I think the equity markets are going to do next year. So I believe that a lot of people think there's an AI bubble. There's not even a question. It's all day long. It's nonstop. I will continue to tell people, if you want to make the mistake of believing that AI is a bubble and then lose money, I don't give a crap. This year, for everyone who's bearish AI and thinks it's a bubble, the only thing that has saved them is one thing. I'm long gold. Mm-hmm. Give me gold. And that's been, if they're bearish AI, the thing that has saved them this year is to be long gold. So my gut tells me the pain trade for next year is gold doesn't work and the AI doesn't bubble. And then everyone has to go pick something to buy. Mm-hmm. I thought that was going to happen this year, not with the gold part, because I think gold long-term is going to go higher. But a China-US deal is critical to this whole situation. So what has led me to believe is that I do believe people were selling Bitcoin ahead of the 4-year cycle. Great. So then the way I deal with everything in the traditional finance world, just like it was before, any period that people believe, if you take out the highs before that. So now 126 has been set in stone. The reason I'm buying Bitcoin is because I think when we get through the all-time highs again and basically get rid of this 4-year cycle belief, now there's no imaginary place for people to ever again care about. And that's normally what happens in equity markets. And oh, by the way, 2017 was the end of the Donald Trump tax cuts. Well, we've had tariffs this year. We've had bad stuff happen this year. The equity market in 18 was bad. At one point, it was down 20% year to date in December. In 2022, the equity market was down. So the one thing about the Bitcoin halving cycle, it seems to have been trading with traditional finance markets. So when you say that Bitcoin's 4-year cycle is going to play out next year, you're also embeddedly saying you don't believe in AI and you don't believe profit margins are coming and you don't believe the earnings are going to be higher and the S&P is going to go higher.
And you don't believe that the Fed's going to cut interest rates.
Yeah, exactly. The Fed's going to cut rates. And for all the dot-com bubble people out there, just remember, the Fed was raising rates into the dot-com bubble. For some reason, everyone highlights the fact that the Fed cut rates in 98, but they had to turn around and raise rates going into 2000. And we had the Y2K problem. Mm-hmm. So there's a lot of things with the dot-com bubble that just don't hold. So
as Jordi points out, markets today react to information faster than ever. A single tweet can move billions in capital in seconds, amplifying fear and excitement simultaneously. He reminds us that bubbles always exist somewhere in the market, but that doesn't mean the entire system is a bubble. In his view, the so-called AI bubble is misunderstood. Zero-revenue startups may be overvalued, but the broader earnings picture remains anchored in real economic growth. Nominal GDP continues to expand, and with it, corporate profits. That's why Jordi believes the panic over bubbles, inflation, and tariffs is misplaced, especially when it comes to Bitcoin. Despite steady money supply growth, rising gold prices, and expanding stablecoin markets, Bitcoin has traded sideways for most of the year. Visser interprets this as evidence that many large holders, what he calls whales, sold in anticipation of the expected 4-year cycle correction. But if that cycle is breaking down, their early selling could set the stage for a powerful rebound. And once Bitcoin clears its previous all-time highs, the narrative shifts permanently, from cyclical speculation to structural adoption. That's where Visser transitions to the next key issue, the geopolitical backdrop shaping the global economy. In particular, the trade dynamics between the United States and China, and how they tie into commodities like gold and rare earth elements.
The China-US deal is far more important when it occurs, and I do believe it will occur, whether it's in November or whether it's in December. When it occurs, I think people have to sit back and take a look at what this agreement is going to mean. Because for this year, we've had a lot of problems. The Chinese export numbers came out over the weekend. They were up 8% year over year. The Chinese exports to the US were down 27% year over year. This has never happened before. So this has been a year where China has been kind of redirecting flows. They haven't bought any soybeans. So on the import side, they haven't done it. This is a trade negotiation, which has left a lot of people kind of worrying about what's actually happening. There's a lot of businesses in this country that get stuff from China, and they can't get them right now without tariffs. And so you've had this kind of disconnect. A deal happens. This is a major event for the world because it basically is going to mean a lot of things that I think people have been worried about. And gold is a worry thing. So where Bitcoin fits in is, if people aren't worrying as much, then Bitcoin goes with the other side, which is stocks. And that's why I'll say again, I believe stocks will be higher next year because the AI situation that people are going is not only accelerating, it's picking up a pace. And all of the tea leaves that I've read over the last 3 weeks in podcasts are people are not underestimating where we are in AI today. They're too focused on where it was in the past.
Let's start with what is a rare earth? Because I don't think a lot of people realize they're not rare.
Right.
So walk us through a little bit. It's like, why is this important? Why is this the thing that is the final trigger point?
All right. So rare earth minerals are critical to pretty much everything that people deals with in the modern world. So let's just start with the simple thing. It's in anything that has semiconductor chips in it, which is even washing machines and cars. Like everything has some form of rare earth mineral that is in it.
And just on this point, there is electronics, phones, all that kind of stuff. To your point, washing machines, etc. I don't think people realize LED lights, right? I mean, just like literally anything that is electronic or kind of quote unquote technology has this.
And cars. I mean, everything that you own that has become in some way digitized through electronics, which is everything that we're involved in, involves rare earth. But it's also an important part of military weapons, especially the modern day ones of drones and everything like that, of humanoids coming up. Like it's critical. And the problem is the US outsourced this to China, as did the rest of the world. Now, the irony is the reason it was outsourced to China to mine for these is incredibly toxic. I mean, so where are you going to do this in the US? So whenever they go, well, we'll just do it in the US. Not an easy thing, especially when there's states and there's regulations. And
they won't even let us build a pipeline in the US.
So, I mean, rare earth is toxic. So China has been like, yeah, we'll do it. And so they've done it for the world. And
they have big deposits.
And there's quotes from as early as like 1980 from Deng Xiaoping that they were going to do this for exactly the reasons that have come up. We'll do it for this reason. So the Chinese always get talked about that they think and they make plans 30 years in advance. Well, this was a 30-year plan, knowing that it would be in this position. Now, they didn't know when someone like Donald Trump would come, when the U.S. would be in a fiscal situation. Because remember, when you think of the tariffs and you think of the trade negotiations, you have to remember this goes beyond this. This is NATO. This is everything. The world is becoming more independent. It's breaking up. And it's becoming less centralized. And the US was the dominant feature. The dollar was the dominant feature. So rare earth is the bargaining power of China. And it's really important because there's no way for the US to get the supply. Even if they fast track it and they, JP Morgan said, we'll put up $1.5 trillion. The Pentagon said they're going to put $1 billion into this. Everything they've invested in companies. There's no way, listening to every single expert on rare earth, that the US can come up with enough of it in the next 3 years to deal with the problems they have. Is there enough for the next 6 months? Yeah, everyone has kind of front loaded. They bought things. They got what they needed from what I hear, but they will run out. So this becomes an issue. So this is China's bargaining power. Now, the good thing is, if the US can get what it needs in 3 years, either internally or in other countries that are also worried about China, because it's a global issue what they did, Chinese lose their bargaining power fairly soon. So they're either using it for military reasons, like they're going to go invade Taiwan, which I think is highly unlikely, or this is part of the trade side and they're dealing with Donald Trump the way that you need to deal with them. As a reminder to everyone, because when you hear China, you think of country, and so people get the numbers. The US economy is close to 30 trillion. The Chinese economy is close to 20 trillion. The next economy below that, guys, we're dropping all the way down into the low single digits. So this is the pound for pound heavyweight fight. So he can't just walk in, and that's what China's saying. You can't just walk in and put tariffs on and go through it. So if you ask me what's likely to happen, there will be a deal. I've tried to figure out how it can end up that Donald Trump doesn't look bad and the Chinese are able to get what they want. I think almost no tariffs on China, believe it or not, almost no tariffs, with a large investment into the US in something and purchases of soybeans and all of this stuff. So he can say he got investment dollars and this happened. And then everyone can go figure out how to deal with things on their own for the next 3 years as part of this divorce process of the coupling. The one thing I want to remind people that I fully believe, and it's part of my Bitcoin thesis, China has decided that they will back their yuan in gold. So they're looking at gold in yuan terms. So they have reserves. On the US side, we've chosen stablecoins. These are the two kind of new worlds that are going on. China's not too happy about the stablecoin thing. Europe's not too happy about the stablecoin thing. This just means that the capital flow argument that all of these great historians have said is taking shape with the old framework of gold and the new framework of stablecoins. And this is why Bitcoin is going to be a major, major part once the deal is done, because then we've set the table between gold and stablecoins.
In the second part of his analysis, Jordi Visser zooms out to the global chessboard. He believes a new US-China trade agreement is inevitable, and when it happens, it will ripple through every corner of the financial system. The deal, he argues, won't just ease tariffs. It will reset global supply chains, restore confidence in growth, and shift capital flows back into risk assets like equities and Bitcoin. The data already supports this view. Chinese exports to the US are down 27% year over year, a record decline that both sides can't afford to sustain. A truce isn't just likely, it's necessary. But Visser takes it a step further. He warns that rare earth minerals, essential for semiconductors, EVs, and modern defense systems, have become China's most powerful bargaining chip. The US can't replace these supplies fast enough, and that dependence gives Beijing leverage in trade negotiations. This is more than an economic story. It's about the structure of global power. China, he says, is aligning its monetary future around gold, while the US is moving towards stablecoins and tokenized finance. Once the trade deal is signed, these two systems, gold and digital dollars, will coexist, creating a new global balance where Bitcoin acts as the bridge asset between both worlds. If Visser is right, we're entering a phase where monetary innovation, AI growth, and macro easing all converge. That combination could unleash one of the strongest bull markets in recent memory, not just for stocks, but for digital assets. Bitcoin's role as a macro hedge, liquidity proxy, and cross-border settlement tool positions it perfectly for what's coming next. So, as we head into 2026, Jordi Visser's message is clear. Stop waiting for the next halving cycle and start watching the macro tide. Because this time, Bitcoin isn't just following the market, it is the market. If you found this analysis insightful, make sure to like this video, subscribe to the channel, and share your thoughts in the comments below. Thanks for watching, and stay tuned for more expert insights from the world's leading macro minds.